You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back once again. It is Thursday. It is 1:30 p.m. Central. It is 2:30 p.m. Eastern. It is time once again for TWIFO, This Week in Futures Options, a program where we break it all down, everything going on in the world of futures options. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the ever-scintillating network. All we ask is three things. First off, if you do like what you hear, and you're not listening to the full network, first off, make sure you subscribe to the full network. B, throw some rating, throw some stars on your platform of choice. If you do like what you hear, if you don't like what you hear, just send all your hate mail to my co-hosts. And of course, if you want to go above and beyond, theoptionsinsider.com/pro is the place to go to learn more about all the fun we have. Live, great pro Q&As. Just had a great one with the once future and now present Dr. Vicks, recovering from a bit of an accident, so he's doing well out there, but answering all your ball questions. Nonetheless, live access to this, every other show we do here. Giveaways, going to be giving away the March Pro Trading Crate soon. If you're entering the Pro, you automatically entered to win, as well as all sorts of other fun stuff, exclusive early access to content. Nearly 200 episodes of exclusive shows there waiting for you. The second you hit that sign-up button, you're already locked in for a week plus worth of nonstop content. So you got a lot in store for you. I envy you. theoptionsinsider.com/pro. And I also envy you because now you get to enjoy my cohort holding down the CME Group hot seat this week, our old friend, Mr. Dan Gramza from Gramza Capital Management. Mr. Dan, welcome back to TWIFO, sir.
Thank you very much, Mark. I can't wait to dig into some of these markets. It's been very interesting since the last time that you and I were
yes,
together.
That's a good word for it. Interesting. It has certainly been interesting. Let's see how interesting the movers and shakers are right now.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everyone, welcome to the Movers and Shakers Report. This is, of course, one of the premium reports from our friends over there at Bantix, which If you're not hitting bantix.com, BANTIX.com, signing up for the free trial of Quick Strike, what the heck are you doing? If you did that, you would see that this report's roughly 60-40 green to red this week. You can see this full report for yourselves. This is one of the few premium reports we put out there for you over there at CME Group on Twitter. If you follow us at Options on Twitter, you can see this report for yourselves. Mostly green right now. We'll see how the week ends up. But Mr. Dan, you are our guest. You get to choose where we begin, sir. Where should we start? To the light side or to the dark side this week?
Well, both are very tempting. Shall we start let's start to the dark side.
All right. I like it, sir. To the dark side we go. Number 5 to the left, to the dark side. Actually, we have a tie. Twofer in the number 5 spot. We have the Ultra 30-year bond and the Yen USD, both off 1.68% exactly. How weird is that, listeners? You don't see ties too often on the movers and shakers, but we got one in store for you. So it's actually a dark 6 this week. And then number 4, we got the 3-month SOFR off 6.08%. And then number 3, one of our 3 frequent offenders popping into the list here this week, listeners. It is nat gas. You think there's not much more blood to be squeezed from that stone, but you'd be wrong, listeners, off 6.35%. It was number 1 in the same direction last week, off 11.61%. So, man, they have been coming for nat gas. I definitely want to pick your brain about that in a minute, Mr. Dan. Number 2, our old friend, the Eurodollar, is not much going up out there anymore, but still off 8.78%. And number 1 to the dark side, one of our other frequent offenders here, it is lumber off 9.1%. It was number 5 in the same direction last week, off nearly 5%, 4.81%. So a rough couple of weeks for nat gas and lumber, 2 of our frequent offenders. All we're missing is Bitcoin, and we have the trifecta. Let's see if we can find it to the light side, listeners. Number 5 to the light side is our old friend WTI. So a bit of mixed messaging coming out of the energy complex this week with nat gas to the dark side, WTI getting a nice little reprieve here, up 4.53% for number 5. Number 4, soybean meal. Once again to the beans, listeners. You can't escape the beans these days. Soybean meal up 5.11%. It was number 3 in the other direction last week, off 5.75%. Number 3, right behind it, soybean oil, 5.44%. It was number 2 in the other direction last week, off 7.88%. And then staying in the ags for number 2, we've got good old Chicago wheat up 6.16%. And the number 1 light side mover this week, listeners, also in the ags, it's KC wheat up 7.14%. But Dan, I was talking about you on the show last week when I was talking about nat gas and just how much it has been beaten up. And that process has continued this week. So I think we got to start in energy first.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, welcome to the ever-turbulent world of energy these days, listeners. Head on over to cmegroup.com/TWIFO, TWIFO. That's, of course, the reports that we generate for this show, This Week in Futures Options. Once you're there, listeners, go into that asset class drop down, go down 3 slots to energy, then you're going to go down 3 more in the product family to nat gas, and that is where we will begin our journey this week. Kicking off the show, Dan, at a 209 in that front May future. The last time you and I talked a few weeks back, we were kind of wringing our hands with nat gas around, I believe, the 2.5 level at the time, saying, man, they've really come for it. How much lower can it go? We were talking about put paper on the 2 strike, the 1 3/4 strike. We were kind of surprised by that. And now here we are a couple weeks later, and we're threatening the 2 handle even more, Dan. What say you? Make sense of this for me.
Well, I'm not sure about making sense because it is indeed a puzzle. But we want to remember, a lot of people are saying that this is it. We're so cheap, you just can't go lower. Well, when someone says can't or never, we know it's probably going to go lower. And we've been lower. We want to remember we've been as low as $1.94 a while back. Excuse me. So this indeed can further weaken. But if we think about what's going on, we've had warm weather, not only in the U.S., but also in Europe. So some of that demand is down. And when we had the Freeport refinery or the LNG facility had that fire. That closed it down. Mid-March, it finally opened up. But in the meantime, we weren't shipping out as much LNG. And the result is our stockpiles started increasing. And what's fascinating to me about this is really we're looking at the old supply and demand. We have a lot of supply out there right now, and we just don't have that global demand to soak it up. So we have the capability of shipping out that LNG. And if you're not familiar with that, what happens is they take natural gas, they take those molecules that are bouncing around in a gas form and they squeeze it under high pressure and they lower the temperature to slow those molecules down. The result is we get a liquid and then we can ship that out. But it takes special facilities to produce that, and then also special ships, containers to send it off, and import facilities depending on where it goes. And we've seen a dramatic change in Europe in terms of its ability to accept LNG from just a year ago, and more to come in the future for that part of the world. So it's a fascinating market that really, I think, is just showing us that demand and supply equation. To me, what would be logical here, Mark, would to see the market go sideways. That $2 is the magic number for this market. We've kissed it twice. Back in, I think it was about February 21st or so, and then just a couple days ago, we got near that $2. And we do see, shadows. From my point of view, it shows that buyers are coming back in. And really, when you think about that price level, I think for us, it indicates the idea of hedgers coming into the market. Some people do want to lock in that cheap price if they can. So technically, it indicates that's what's happening. But just one more thought, and that is today's action. So what are we seeing? Yesterday, we had a positive close. Can those buyers follow through? No. So far today, we're down, heading back towards that 209 level maybe. We're at 210 about right now. And then how do we want to finish this week out? Mark, I can't wait until Friday. Because what we know in nat gas, people have to make a decision. The people who are selling it right now, do they want to go home short going into the weekend? This is getting near that decision time. So if Friday's down, I think what will be important for us to pay attention to is how Friday finishes. Does it break down to 2? Does it kiss 2 and then bounce off of it like we saw previously? That would indicate that the shorts are willing to pull back. In other words, maybe take some profit before they go into the weekend. On the other hand, if we close down right near its lows, that would imply sellers are willing to hold on to those positions, and it implies further movement down on Monday. So I think tomorrow could be a good barometer for us to follow to get a feel for what's going on with nat gas.
Certainly can't be any crazier than it already has, right? I'm going to guess right now. You and I were just talking not too long ago, 7, 8, 9, 10 strike calls. I'm going to guess today. I haven't looked yet. I'm going to guess we're going to be talking about maybe 1 3/4, maybe 1/2 puts today. What do you think, Dan? I'm just going to go out on a limb and throw that out.
Wouldn't it be surprising, Mark? Yeah. I think you're right.
Let's see. Right, actually, a pretty active week on the tape so far, listeners. 653,000. So the paper kind of backing Dan and I up. The paper can't believe we're at these levels either, but nonetheless, here we are, listeners. What is the vol right now? You might be asking in that front nat gas contract. It's about almost a 92, 91 3/4, off about 1 1/4 handles on the week. So still pretty frothy. In terms of assets we're going to talk about here on the show today, you're going to be hard-pressed to find one that's more volatile these days than nat gas. It's always flirting around triple digits. Even our friends in the crypto space are hanging out in the mid-60s right now and nowhere near the triple digits they can sometimes play with as well. And, of course, you get out to equities or the ags. Most of them are 30 and below. So It's not a heck of a lot that can really threaten nat gas right now from an overall vol perspective. In terms of skew, what's going on out there this week? The puts last week were bid. Seemed like that was the right trade because they are still bid this week. They were 6% bid last week, 5.5% bid this week. The calls, 2.1% cheap last week, 4.3% cheap this week. And in terms of action, Dan, it looks like I was right. It was the 1/2 puts in May, sir, going up 64,000 times this week. That's just crazy. Except we were just talking about 9 and 10 calls for size. Doesn't seem like it was that long ago, Dan. And here we are, 1/2 puts for ridiculous size, 64,000 of these things this week. My goodness. And you know what, listeners, trading pretty actively every day this week. 20,000 for today, almost exactly. Today is the volume leader. But 17,000 on Wednesday, 17,000 also on Monday, and about 11,500 on Tuesday. So active all week long. Looks like slightly closing on Monday, then opening the rest of the week. So if you were thinking maybe you're going to come in here today, listeners, and it would be a tale of the skew flipping and everyone just diving into all the upside calls and saying, you know what, this far and no farther. Now is the time for the big, much anticipated turnaround in nat gas. At least from an option skew perspective, we are not seeing that this week, listeners. Same thing with the 2 puts right behind it. They were number 2, 54, almost 55,000 of those. The big day again today, 26, almost 27,000. The 2 puts going up. So maybe a bit of a roll down there on the 2 puts to the 1/2 puts. The numbers are kind of close. Wednesday, we had 14,000, 7,000 on Tuesday, and 6,000 on Monday. Also, interestingly enough, also closing on Monday for the 2 puts as well. So Monday was the day everybody bailed on a bunch of their downside puts, only to reopen again pretty much the rest of the week. Then we jump out to the calls. There are some calls. You got to look a little bit to find them, but you can find some call paper. In particular, it's the May 3 calls going up about 30,000 times this week, listeners. So pretty much half of what we're talking about with the put volume here. The big day also today. So today, the banger day for nat gas volume this week. 15, almost 16,000 going up today. So more than half of that weekly volume going up today. 5,000 on Tuesday, 4,500 each Monday and Wednesday. Kind of back and forth opening to closing throughout the week. So not getting the explosion of call paper that maybe some folks were looking for this week. Let's scroll a little bit farther out to see if we see any other interesting and or aberrant paper. If we go all the way out to June, listeners, a whopping 56 days. The big dog out there is actually the 3 calls, but not much, 10,600 of the 3 calls. So not a ton there. And they're right behind them. We have the 2 puts with 10,400. So it's not like there's any sort of crazy upside bias any farther out. If we go all the way out, listeners, to the east of 2024, it's the 2 3/4 puts. I should point out that future in east of 2024, obviously a long way out, listeners, that's at a 432. So a very different environment, but they're still loading up on out of the money puts there as well. But it is still pretty much all front month all the time. So it's very near dated paper. And again, how can you blame them out here when this thing whipping around, it's at a triple digit vol? You want to have some high gamma contracts in your back pocket for a rainy day. And that seems like what we have going on out here. All right, Mr. Dan, we hit nat gas. We've got number 5 to the light side WTI. So should we stay in energy next or should we move on to another complex? Your choice, sir.
Well, I'd say let's stay in energy. That's a good idea.
All right. All right. Then off to energy, or staying in energy, I should say. We go off to easy for me to say today. Off to WTI and crude oil we go, listeners. Stay in that energy drop down. Go up 2 slots in product family to crude oil. Then you're going to select WTI, listeners. That'll get you all the action out here in our old Texas tea friend, hanging out at about a 74 1/4. So again, still looking fairly cheap, but of course back north of the 60 odd handle where we were talking about it on the last show. Up almost exactly 5 handles, 499 this week, or about 7.2%. Of course, you go back to the end of last week's show, it's up about 4.5%. And looks like a pretty average week volume wise, unlike nat gas, about 430,000 contract, which is right around the average for WTI these days. And in terms of where the action was this week, listeners, about 37% of that going up in the May contract that has about 18 days to go. Dan, were you surprised? I mean, I know you're surprised about nat gas threatening a 2 handle. Were you surprised that we also dipped into a 60 handle last week in WTI, sir?
Actually, in some ways, no. I mean, that was cheap, but and the reason I say no is we didn't have the fundamental drivers to create that belief system, I think, for a rally in crude oil. But what was fascinating is we got near that $66. In fact, about five times that we were down on a break, we see that they were buying it. In other words, the technical side that we would see, the footprints that we would see, whenever the market would break lower in those 60s, we'd see those shadows, those lines on the bottom on a candle chart, which tells us that they're buying the break. Even just a few days ago, back actually last Friday, if you look at that day, it was another day that broke down to the 60s. And what happened? It bounced right back up. What's also interesting is what it did on Monday. Monday was the biggest day we've had price-wise for crude oil. What's also interesting is what happened afterwards. We've kind of slowed down a bit. Today it's up. Buyers are still here, but big challenges ahead. If buyers indeed are here, I think there are some references that you and I want to look for, especially tomorrow. And that'd be 75 and a quarter, 75, 75, 76. Those levels, I think, in the next few days are going to be critical. However, I don't see this the beginning of a huge rally. Again, what would be the fundamentals driver behind that? Because, fundamentals, some technical traders say fundamentals are irrelevant because everything is digested in price. And I would agree with that. However, I think fundamentals are important. The price does give us a barometer of belief. That's what we see. We see an EKG to the beliefs that people have when they come to this marketplace. So fundamentally, do we have strong drivers right now in crude oil that get us back, let's say, to $80? I don't see that. What would make more sense to me is that we stay in about a 10, maybe $12 range, maybe 78 down to 68, 66. A sideways move here, I think, does make sense. The market really is, I believe, fairly valued. And I don't think we should expect this immediate move to the upside. If it's going to, then it should happen within the next 3 days. By Wednesday close, we should be above 76 if buyers are here. If we're not, look for a sideways move. If you take a moment and look at a chart on this market, the way we came down, the way we broke down to that 60 level is not the way we're rallying. So is it to the buy side? Yes. Is it a strong move to the upside? No. So I think we have to be cautious on the long side for this market. And I think we have a higher potential to go sideways than we do to see a strong, sustained rally to the upside. And Mark, I can't wait until you start going through the options, because that will also give us that barometer of how do people perceive this market longer term. Where do we see these options playing out? So take it away. I'm really anxious to see what you have to say.
I love when people toss to me on my own show. It's always fun, Dan. But yes, I'm excited as well to see what's going on out here. Like we said, about an average week from a volume perspective. And of that, about 430,000 contracts, 37% going up in the May contract, has about 18 days to go. So right in our sweet spot for the area we like to analyze here. Unless you're talking equities, and it's all going away tomorrow. But outside of equities, we can usually get a little bit more interesting meat on the bone out here. The vol right now in WTI, about 37 2/3. So coming in quite a bit this week. Off nearly 6 handles, about 5.9 points on the week. So vol coming back in. Again, like we said, not much to really match nat gas from an overall vol perspective out here right now. Let's see what the skew has in store for us? What secrets are lurking out there in the skew? Let's find out, listeners. The puts last week, 8.3% bid. Not exactly surprising because we were hanging out in that 60 handle range. So it was intriguing out there. So puts 8.3% bid. This week, the puts remaining bid, which is kind of interesting, 10.4% bid. The calls last week, nobody wanted them, 6.1% cheap. They want them even less this week, 9.7% cheap. So the call's getting cheaper. The puts getting bid. We're starting to look like a nice little mini equity here with a decent premium to the puts and a pretty decent discount to the calls. So that might attract you, listeners, if you're looking at that and saying, well, I wouldn't mind maybe writing some puts here or perhaps buying some upside calls or maybe doing both, a little bit of a bullish risk reversal. It certainly is a skew setup that is favorable for that. In terms of the paper out here this week, if you said it was the May 80 calls, Dan, leading the dance. Dan, did you have May 80 calls on your bingo card, sir? Because that's the winner out here this week.
But though, Mark, sorry, that is a logical level. If we think about where we were just a couple months ago, we were basically locked into a $74 to $82 kind of range for a while. And so that 80, that makes sense. That's a logical strike. But, one other thought is if we get to 80, how it behaves at that strike will be so important and give us insights into further movement. Do we expect it to rally then? Or are we looking again for another sideways move? So that's interesting, Mark.
What's also interesting is the fact that, and this kind of backs up the skew data we were just seeing with the call wing getting even cheaper this week. It seems like folks were not loading up on those 80s. They were getting the heck out of Dodge. They were closing all week long. Like we said, about 16,400 going up this week. Pretty evenly split except for Tuesday. Tuesday, about 7,000 going up and about 3,000 each every day the rest of the week. Closing all week long, so folks were getting the heck out of Dodge on these May 80s. I guess they thought maybe that was a bit of a bridge too far, or perhaps they had overwritten them and that wouldn't really crush the skew if they were buying them back. Either way, it looks like a lot of closing upside paper here in May, which is kind of interesting. Right behind it, we had the 75, so a closer to at the money strike. Looks like folks were bailing on those this week as well. 12,600 going up this week. The big day was Monday, a little over 4,000 on Monday. 3,600 today and about 22 to 2,600 every other day this week. Mostly closing out there as well. So folks bailing on the 75s and the 80 calls in May. That could certainly explain why that skew continues to get beaten up out there. Let's go a little bit farther beyond those, see what else we have lurking out here. How about the 65 puts also in May, going up about 8,000 times this week? The big day is today, 2,800 today, 2,600 on Monday, 1,200 on Tuesday, 1,400 on Wednesday, and that is all opening paper. So that would also explain why we're seeing that firmness to the put wing out there. Folks opening on the puts, bailing on all the calls. So intriguing stuff out there, listeners. If we go a little bit beyond that and go a little bit farther out, let's go all the way out to D's of this year, listeners. How about the D60 puts? How does that intrigue you? 7,300 of those going up this week. Almost all of that going up on Monday. Nearly 5,000 going up on Monday. A ton of that opening. So a lot of opening paper on Monday, about 1,000 on Wednesday, 700 each Tuesday and today. Seems like mostly opening on these 60 puts in December throughout the week. Let's take a look here at the skew in December. Let's see if it's similar to what we're seeing in May. And the answer is it is. The puts are about 9.2% bid in December and 8% cheap are the calls. So that's pretty much the setup throughout the entirety of the term structure, listeners, is folks can't get enough of the puts and they don't want to touch the calls. The calls are like hot lava. You don't want to hold them in your hands for too long, apparently, out here. So intriguing stuff. Not exactly what I expected on a week when we're seeing a bit of a resurgence out here in WTI, but that could also, again, show maybe longer term the people's thoughts on the prospects for WTI. Obviously, not exactly blowing the doors off, at least in the near term here. All right, Dan, we hit on two in the energy front. Where should we roll on to next? Should we have a couple of ags? We have actually a bunch of ags on the light side. We've got rates in the dark side or something else. What's catching your eye out there this week?
Ooh, that's a tough one. Well, shall we look at the ags? since you mentioned that
I think we can make that happen. All right, off to the Ags we go.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk Ags.
All right, everyone, welcome to the wonderful world of Ags. Going to that drop down, it is alpha order, so go all the way to the top to agriculture. Then we're going to go over to product family, grains and oilseeds. Then we have an embarrassment of riches this week. We have soybean meal and soybean oil at 4 and 3 on the light side. We have talked a lot of soybean meal and oil of late, so maybe we'll mix it up this week. On number 2 and 1, we have wheat, Chicago wheat, and KC wheat. Let's go to number 2, Chicago wheat, not just because we're recording here in Chicago, but because it does a lot more paper, 111,000 contracts for the Chicago wheat right now versus our KC friend coming in at about 11,000. So a market difference between the two. Mr. Dan, what's catching your eye out there in the wheat this week, sir?
Well, what's interesting is it's very contained. I was looking for more of a bounce to last. Right now, I'm looking for a longer-term point of view, a sideways move in the wheat. We're basically kind of in this 660 to around 710 to 720, kind of a sideways move here. I mean, if you look at yesterday's action, we had a rally going. We're above 720, and I'm talking about Chicago wheat, but it backed right off. And the selling that we saw yesterday continues today. So it's an interesting barometer for the complex. I do look for a weaker close going into the weekend, but I don't look for it to fall out of bed. I mean, I think if we get near that 660 level again, look for another bounce. And what the structure shows me, or I feel about it, is also what we would see in live cattle or feeder cattle, especially a number of years ago. You see this kind of structure when you see hedging going on. People are locking hedges at higher prices. You see evidence that sellers are there. As it breaks to the downside, in this case 660, you see buying coming back into the market as people are trying to lock in those prices. When you see that kind of behavior, you can stay in a sideways move for a while. And right now, I'm looking for weakness in wheat. I'm looking for a weaker close on Friday as we go into the weekend. The first part of next week, the first 3, maybe to 4 days, we would expect to see further movement to the downside. In other words, below that 670, or let's say back down towards that 660. If we do, then we want to watch how we get down there. So I don't see any evidence in Chicago wheat for a reason to be a buyer at the current levels.
All right, let's check out what's cooking out there in the land of wheat. Listeners, we're hanging out at a 691 coming into the start of this segment. Listeners, that puts it up about 2.5 handles, or about 1/3%. Obviously, if we go back to the end of the show last week, we're up over 6%. So a different story there. 111,000 contracts on the tape. 66.6% of that going up in the May contract. Has about 22 days to go out there. So we'll be hanging out there as well, listeners. What is the vol in wheat? It's about 30, almost 31, about 30.9 right now, kind of unched on the week. And again, kind of goes back to what I was saying on some other shows this week. You get outside of nat gas, most of the assets we're going to talk about here are somewhere in the 20s to low 30s from a vol perspective. There's not a ton really outside of that. And of course, nat gas in kind of a league of its own out there. In terms of skew, the puts last week, they were exactly flat. Nobody wanted them. Nobody wanted to touch them at all. Nobody really cared about them one way or the other. This week, they are 5.2% cheap, so the puts coming in. The calls last week, 2.8% bid. This week, 4.4% bid, so a little bit of a different skew setup out here, as you would expect in some of these commodities, listeners. Nobody wants to puts. Everyone's all excited, all jazzed up about the calls. And in terms of action, let's see, what was leading the dance out here this week? I said we're at a 691. In the future, it was the 800 calls, 800, leading the dance with about 8,700 contracts. That's interesting. Perhaps not my first choice for strike, given the fact that we're threatening 700. I would have thought maybe there, but no. 800 this week, listeners. 8,700 The big day yesterday, 4,800 yesterday, 2,000 on Tuesday, 1,300 on Monday, about 500 today. Looks like a lot of folks are bailing on these calls. It was mostly closing throughout the week, which is kind of interesting given the fact that that call wing is still fairly bid. Then we have the 7.5, so right behind it, the 750s going up 5,900 times, actually. The big day also Wednesday, 3,100 on Wednesday, 1,600 on Monday, and about 500 each Tuesday and today. Kind of back and forth opening to closing throughout the week there. Right behind it, we have the 700 calls and the 6.5 puts, both kind of doing right around 4,000 contracts. We'll do the calls first just to wrap up the call wing here. The 700 calls, what I expected to be leading the dance this week, doing a little over 4,000 contracts. The big day for those actually today. So not Wednesday, but today. 2,300 today, 800 yesterday, 500 each the rest of the week. Again, back and forth opening to closing. So kind of interesting stuff there. And then the 650 puts, they did about a little over 4,000 contracts as well. The big day for those, back to Wednesday. 2,200 on Wednesday, 800 on Monday, 600 each Tuesday and today. Looks like back and forth opening to closing there as well. So kind of all over the place, opening and closing throughout the week. All over the place from a strike perspective, all over the place, opening versus closing. Intriguing stuff out here in good old Chicago. Let's go a little bit farther out, see if we can find any other intriguing paper here. Let's go to the July contract, the 750s. They went up about 5,000 times this week. The big day is actually yesterday again, 2,200 yesterday, 1,800 today, and the rest kind of scattered throughout the week, mostly opening. So opening all week on the July 7.5s, which is kind of interesting in and of itself. Let's see. And that's pretty much about it for the size paper out here. Let's see. Anything else? Dan, do you want to touch on any of the beans really quick or keep on rolling some of the other complexes?
Well, we can take the beans too. There is one more thing when you were talking about those strikes, Mark, you got me thinking, is that something we do want to pay attention to is the U.S. dollar, but also what's happening in Ukraine and Russia. Right now, the ability to ship grain that door still seems to be open. And that takes some of the pressure off when you look at our pricing here as well. So I think that's something to take into consideration. When we look at the weather conditions in Europe, especially pay attention to France. That's the largest producer of wheat in the European, Western European side. So pay attention to what happens with them. Canada, our friends in Canada, and Australia. Those are also large wheat producing areas. So we want to keep our eye on the weather. We've had drought issues and we'll see what happens this season. But right now, I just don't think this market has a reason to take off to the upside. But beans, shall we talk about beans? You want to take a peek at those?
Sure, let's do a quick hit on the beans. We have soybean oil and soybean meal lighting up our tape this week, or you can go for the beans themselves, so your call.
Okie doke. Well, let's go to the beans. What we've seen for the last 4 days, we've seen consistency to the upside. They've been fairly consistent in terms of movement from the buy side. Today, just the opposite. We've slowed down. We're finding some sellers around 1480. It implies it could cool off again going into the weekend. Friday is going to tell us a lot. Do we close above 1485 going into the weekend? Ooh, buyers are still here. Do we close below 1480 going into the weekend? Not a good sign for continuation. That also would imply the possibility of a sideways move. One other thing I think to keep in mind is the way we came down, the way soybeans broke to lower levels around that 1420 to 1410 was dramatic. We did it in 3 days, basically. It's taken us almost 5 days to cover that same range. So buyers are not coming back into this market the way sellers hit it just a few days ago. So I would want to be on the long side for this market, but cautious at these current levels.
Let's check out those current levels right now. We have soybean meal and oil lighting it up on our light side this week, listeners. Both of those, soybean meal doing about 48,000 contracts this week, soybean oil doing about 40,000. Obviously, the big beans are the mothership out there doing 265,000 contracts. So we're going to hang out out there right now. Soybeans right now, 1474.5, up about 46 handles, about 3.25% just this week. So a pretty active week for the beans, all things considered. Almost half, 48% of that paper going up in the May contract has about 22 days to go. So we're going to hang out there. The vol, talk about anemic listeners, 13.75 off 6.75. So if the 30 odd level of vols we were just talking about out there is not doing it for you, well, then here you go. Much cheaper. 13.75. Very anemic vol in soybeans right now. The puts, they were all the rage last week, 13% bid. This week coming crashing in. They're still about 5% bid, but they've come in quite a bit. The calls last week, 18.6% cheap. Man, we had crazy skew last week. Obviously, that vol has come crashing in as well, so that probably accounts for a lot of those wings coming in. But still, extreme levels. 13% bid were the puts, 18.6% cheap were the calls. All that's gone away this week. 4.7% bid for the puts, 4.7% cheap for the calls. So that's interesting. And it was such an extreme level of bid only in this May contract. All the rest of the months were normal last week. So maybe there was some weird data issue with May last week as well. That's an extreme move in the skew for the beans. Let's go out here really quickly to see what's lighting it up this week. It looks like it's the 1,500 calls. Again, not surprising. These are going out in about 22 days in May. We're threatening that level right now, right around 1475. So 1,500s makes a fair amount of sense. They went up almost 17,000 times this week, 16,970 to be precise. The big day was Monday, 7,500 on Monday, 4,300 today, 3,300 on Tuesday, and about 1,800 on Wednesday. It looks like opening most of the week except for Wednesday, slightly closing then. So folks piling in to some 1,500s this week. Not exactly surprising given that that's where we're heading, at least it looks like right now from an underlying perspective. 1490s right behind it, doing about 10,000 contracts. The big day for those. Wednesday, 3,100, 2,800 on Monday, 2,000 today, and about 2,000 on Tuesday. Back and forth, opening to closing there as well. Then we've got 15 halves. So 1,500s are not optimistic enough for you listeners. Here's the 15 halves, about 9,000 of those, 5,200 going up today, 2,000 on Monday. The rest kind of scattered throughout the week. Let's look really quickly to see if we see any other interesting and or aberrant paper. If we scroll out a little bit, and the answer is not a heck of a lot, with the exception of, like we've got the November. These are the November 1400s going up 7,200 times this week. So that's actually kind of interesting. The future out there, listeners, is at a 1304. So the 1400s makes a little bit of sense on that level. The big day for those, Wednesday, 3,300 going up on Wednesday, mostly closing, 1,800 today, 1,300 on Monday, and about 700 on Tuesday. So it looks like back and forth opening to closing throughout the week. So some intriguing stuff. Dan, we got time for at least one more complex here. So where should we hang our hat next, sir?
Well, shall we go to the equity market?
I think
look at some stock indices.
I think we can make that happen, sir. Off to the equities we go.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, listeners, pop into that drop down again. Pop out of ags. You're going to go down 3 more slots to equity indexes. And you're going to go to U.S. Index E-mini. Probably hang out in the S&P. Where we go from there, who knows? Before we do that, listeners, let's set the table from a vol perspective. Coming into the start of the show today, we had VIX just flirting with, just kissing a 20, about a 1993. That's down about 3.75 points from where it was this time last week. The vol of vol, VVIX itself at about an 88. That's down a whopping 22 handles from where it was this time last week. So vol of vol coming crashing in over the course of the past week. A vol Q at about 22.5. Vol Q, of course, listeners, the at-the-money vol of the NASDAQ. So they ship out all the skew, unlike VIX. There's no puts and calls in there. It's just straight, at least no put and call wing. Obviously, it's at-the-money puts and calls. No put and call wing, no skew, just all straight at-the-money vol there for NASDAQ. That's at a 22 and about a half. That's down a little over 2, about 2.1 points. Puts that VIX to vol Q spread at about a little bit north of 2.5. That's widening back out. They were trading almost equidistant not too long ago. Now that's widening out again at about 1.66 points wider than this time last week. All right, Dan, A lot to unpack in these crazy whipsawing world of equities. As we're talking, it seems like we're back in rally ho mode again. We're flirting with this 40 half level in the S&P out here. What's catching your eye this week in the topsy-turvy world of equities?
Well, I think they're all marching to the same beat of the drum, except our friend Mr. Russell. That one's behaving totally different. But if we stay with the S&P, we are firming up a bit. And we've had some things that I think has eased some of the concern in the marketplace. We've had the Fed coming out with their point of view of what they see the future being. Not much has changed. They weren't totally against cooling off a bit, but that seems to be back on the table that they are going to be doing something again. But also what's happening with the banking side. I think that's been helpful. The way the Fed has handled it, the way the Treasury came back in and said, look, you got deposits there, we're going to take care of them. If we look at the Silicon Valley Bank, they had, I can't remember the numbers, over 100 billion, I think, that went to the bank for withdrawal. So really unusual behavior. And a lot of people feel that our banking system's kaput. I don't see that. Are there some banks out there that did get caught? Yes. Are there going to be possible other failures? Possibly. But I think overall our structure is not the same as it was when we had the subprime mortgage. And, we had some things fundamentally that came out today that I think helps some of the attitude. That our GDP was revised slightly down. The economy expanded at an annual rate of 2.6% on the quarter, less than 2.7% they expected. U.S. corporate profits were down 2.7% in the fourth quarter. That should make the Fed a little happy to see that economy possibly slowing down a bit, which goes back to their concerns about inflation. So we're seeing something, net dividends are down 1.8%, undistributed profits were down 4.4%. So I think right now the market's feeling more comfortable. We are at critical levels. So this 40.75 is where we found sellers before. The last 4 times we kissed this area, we have backed off. So again, how do we go into the weekend? Can we get a close above 40.15 to 40.20? 41.15, to 41.20? Ooh, that would say a lot of confidence. If we see something less than that, if we close below, right where we are right now, but below that 40.75, let's say we see that, then look for a sideways move again. It's been positive for the last couple of days, but we're not out of the woods. I lean towards the buy side when it comes to this marketplace, and nothing telling me to be a seller today other than we found sellers before at this level. So caution, yes, but are we seeing this rise in comfort in the market? So far, I think we are. And that would imply further movement to the upside. Next week, it's going to be very important for us to see how the market continues to absorb this. And that would mean by next Friday, we'd want to see this closing above 41.20 for the S&P. And what's fascinating also, if we stay with the indices, the 500 is going to be interesting. I can't wait to hear what you have to say about it. But the strongest out of the indices is the NASDAQ. And 13,200 is where you'd want to see it closing above again by next Friday. The Dow, 33,250 to 300. That's where you'd want to see that one closing. And Mr. Russell, it's the weakest out of all these indices. Be very careful if you're bullish this market. It just isn't giving us that level of confidence that we see with the other ones. It really implies weakness going into the weekend. So it's really a very interesting mix with these indices as we're finishing this week out. It's fascinating. And Mark, what's great is that you and I get to look at all these different indices, from a futures and from an options point of view. We have choices, and it'll be interesting to see if the Nasdaq continues to lead the way, and can this S&P catch up?
Well, let's check out, since you're talking S&P first, we'll head out there. And a pretty active week, as you might expect out here, listeners. About 2.7 million contracts on the tape right now. Exactly 25% of that going up in the March contract that has, a whopping 1 day to go. So end of month March, obviously, there, listeners. That's just the way things trade in equities right now. In fact, the biggest print this week, once again, 106,000 this time. They weren't messing around this week of those nonsense puts. The 34 quarter puts, they did 106,000 of those bad boys this week. Obviously, we're going to skip past those. Instead, we'll go to the 40 quarter puts. If you're wondering what the vol is in these contracts, around a 16 or so. But again, they go away in 1 day. So vol, such as it is, kind of a bit of a, not quite meaningless, but far less impactful concept when you're talking about a 1 day to go contract. It was the 40 quarter puts here that are going out in a few seconds that are leading the dance out there this week, listeners. 30,000, pretty much 300 of these going up this week. All of that today, a little bit yesterday. 28, almost 29,000 of the 40 quarter puts traded today. Again, I said we are threatening that 40 half level right now. So intriguing. We started to seem like we were going to sell off in the middle of the session. Seemed like we might threaten that 40 quarter level. I wonder if that's when a lot of these 40 quarter puts went in today. Either way, that was the big dog today and indeed this week out here, outside of obviously the nonsense puts, listeners. If you want more of those, the 34 half puts trading going out today also traded 27,000 times this week. So there is still a lot of that, but navigating around that stuff. Also, not all puts all the time. It was the 40-75 calls. So again, with a lot of this near dated paper, we do see people aggregating around these types of psychologically important strikes. It makes sense. That's how people tend to aggregate their trading. 22,000 of the 40-75s going up today as well. 22,000 total this week, 18,500 today, 3,000 yesterday. So obviously the lion's share of this paper is going to go up in this last 24-hour period here. Intriguing stuff nonetheless here for these 40-75s and these 40 quarter puts, all going the way of the dodo in a few minutes. Let's scroll a little bit beyond that, see if we see any other interesting and or aberrant paper. 3,200 puts. A lot of these nonsense puts really kind of gumming up the works here, listeners. Let's see if we can scroll past those. 36 half puts. Also, again, kind of nonsense puts here. Let's keep going down here. Looks like mostly 40 quarter puts and 40 quarter calls doing the lion's share of that near dated paper this week outside of the crazy nonsense. If we go a little bit for 3,600s going all the way out to April, those 3,600 puts were pretty active there as well. That's not quite as nonsensical of a level as the 34 quarters, listeners, but it still is a pretty long way down the strike chain there. Since Dan mentioned NASDAQ, I'm going to pull that up really quickly before we got to get the heck out of Dodge. We don't get a chance to talk NASDAQ a lot, but it has been popping up on our radar more. We were talking about Vol Q. Russell in our Pro Q&A yesterday was saying he's looking a lot at NASDAQ these days as well. Obviously, a smaller volume product, 112,000 contracts. The NASDAQ hanging out 1368 right now as we're kicking off this segment here. Up 178 handles this week, or about 1.4%. And the big dog out here in NASDAQ land, and again, a lighter volume product, but it does seem like the volume, such as it is, a little bit more evenly distributed, not quite as all going out tomorrow. There is some paper going up in about 22 days as well. So a little bit of paper. Still, if you add up the first couple of days, you're going to get about 30% of the volume from this week. So it is still obviously going to be biased towards the front. Looks like the 13 half calls going up 1,100 times is the big dog this week. Those are going out pretty much in a few minutes as well as the 12,500 puts going out in 7 days. They went up about 1,100 times almost as well this week. So those are the two kind of big trades out here in the NASDAQ. I said 13 halves, and we're at a 1368. So those are now in the money calls. 12,500 puts. Have to move down a bit of a ways to threaten those again. But then again, it is the NASDAQ. It can do that in a couple of sessions without problem. Actually, if you go a little bit farther out here, listeners, to June, a whopping 78 days, we do find the 13,250 calls going up about 1,400 times. So technically, that would be one of the volume leaders out here this week. The big day for those Tuesday. It looks like someone took off a bunch of them on Tuesday. So it looks like that mostly is closing paper out there. And if we keep scrolling farther out, it looks like I actually buried the lead. Go all the way out to September, Dan. I see September, 10,500 puts going up 6,200 times. That was the big dog this week. And 4,600 on Tuesday, 1,500 on Wednesday, opening on both days. Looks like slightly closing on the 1,200s that same day as well, 3,400 of those. So maybe a bit of a roll down, 1,200 puts in September down to the 10,500s. If that's the case, it's kind of an interesting time to do that. September obviously still has a lot of meat on the bone. You might want to hold on to those 12,000 puts if that was the case, but could potentially be a roll down there as well. But that's kind of your paper lighting it up out here in the equities this week, listeners. All right, everybody, that music means we've come to the end of another epic sojourn through the world of futures, options, talk equities, we talk ags, and of course, a bit of energy there as well. If you have a product you'd like to see us talk about on the show, if it's not making our movers and shakers, you'd like us to maybe look at it a little bit. As long as it does some paper, we can talk about it here on the show. If it's lumber or oats, kind of hard to sink our teeth into those, but we can sometimes endeavor nonetheless. We do love the listeners at the end of the day. Before we go, Mr. Dan, if folks want to check out all the great content you're putting out there throughout the week, where should they go? What should they do?
Well, they could take a look at dangramza.com. What happens there, there's a free video. It's done every day the market's open. It covers 22 markets. And the free video, there are different selections that I take every day from those markets. And it does show red and green lines, which represent buy and sell levels. These are not buy and sell recommendations. I'm just trying to share my ideas as I look at these markets. And you can go back 7 or 8 years, I think, now, and look at what happened previously. What was I saying when this happened? Or when this kind of a day occurred? What did these markets look like? If you've never traded futures, the place to begin, watch them. Just watch them. See how they behave. And that's one of the purposes behind that website, is to provide that type of look. So take a look at them. And if you only trade, let's say, equity options or futures, there may be some other markets like Mark takes us through that you might find interesting. Maybe it is currencies or interest rates or energy or the ags or metals that you might want to take a look at. And those are all sectors that are covered. So you may find that besides the equity tranche, there are some other things you might want to take a peek at. And like I said, it's done every day. And I hope you find it useful. And it's watched in over 150 countries. Isn't that amazing? It amazes me anyways.
You're spreading the good word, Mr. Dan, and folks are finding it. Not surprising me at all, given the quality of the content you put out there. If you want to see it for yourself, you got a taste of it here, listeners. If you want the full enchilada, head on over to Dan Gramza, Gramza.com is the place to go. And of course, you know where to go to check out these TWIFO reports whenever the mood strikes you. If you want to check them at Saturday at 2 a.m., have at it. CMEgroup.com/TWIFO, TWIFO is the place to go. We got to get on out of here for today, listeners. Back again tomorrow, noon Central, 1 p.m. Eastern, for vol views, breaking down the week that has been and indeed still is on the crazy vol front. And then, of course, after that, for all you pro folks, coming back with options oddities to break down the week that was from an unusual activity perspective. Then we kick it all off again next week with the option block on Monday, all the way through to next Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.